Good evening, everyone. Welcome to closing comments here for February 17th. Let's jump right into our charts and see what happened in the market today. First up, we got our April live cattle on the board. Did see a nice little bit of upside here in this live cattle market today. This April contract opening up with a nice little gap and go to the upside. Prices opening up at $42.75 today, rallying up to a high of $244, coming just shy of that current year's high. That is still sitting up here at around $244.5. Good bullish momentum, good bullish start here for this week, and we should see the bulls carry that momentum over into tomorrow's session. We did have that nice little gap and go off that opening range. Prices coming back down here, finding some support down there near 42. Looking like the bulls are stepping in and offering some good support here so far, and so we should see that upside continue here throughout the rest of the week. Look for the bulls to keep on grinding this market higher as long as we can remain trading above 41.5. Look for the upside to continue here in this live cattle market. Jumping over to our feeders now. This market is about to start rolling over into this April contract. We're going to start moving out of March and over into April, so that's something we're going to keep our eye on here throughout the rest of the week. But for now, we do still have March as the front month. Probably going to be changing here before the end of the week, but we'll let you know as volume moves over into it. Either way about it, good upside here in this cattle market today, in this feeder market as well. Prices opening up there near Friday's high and making a nice strong push up into the 370s. Finishing the day up there right around 371. A little bit of a pullback here midday down here, finding some support at that opening range and near Friday's high. Good supportive action. Bulls stepping in and showing good support in all the right spots. Looking like this bullish momentum is going to keep on pushing higher. Looking like we got a nice start to this week. Look for the bulls to trend out here and try and close this overhead gap and start heading up here towards these all-time highs. We are not too far from it, and so we should be knocking on the door of that here in a hurry. Look for the upside to continue here in this feeder market. Next up, March corn futures breaking down here today. After Friday's balance day in between our major moving averages, we did see a nice little sell-off here to start for the bears this week. Breaking down below our bear pivot there at 430 and that prior day's low, getting some nice push, getting a nice push down here below that 20-day average as well. Over the last couple weeks, we have seen this thing just be pretty sticky here between 425 and 435. We'll have to wait and see how the bears take this momentum into tomorrow's session. If they can get a push down here below 4.25 and try and get a strong close down here below these multi-week lows, that will really get this downtrend moving to the downside and see those bears start to target those contract lows. This price point has been pretty sticky, so if we don't get any meaningful follow through or a snapback rally here tomorrow back into this area, look for price to continue chopping up in the nice low volatility range here. We're just going to have to wait and see if we can undercut some of these prior week lows and get a confirmation close below them. If we do, we should see some nice downside here in this corn market and see it start to drift back down here to the low fours. Crude oil prices with a nice little reversal here today during the Globex session from the Sunday night open and through the holiday session. We did see a little bit of upside, but most of that being reversed out of as we moved into today's session. Good rejection up there near the midpoint of this range, looking like we're putting some pressure down on the $62 level. This market was due after several months of moving to the downside here. This market was due for a nice little short covering rally, and that's what we got here throughout the middle part of January and into the first part of February here. At the moment, this market's just kind of been cleaning up some of that leftover supply from up there and looking like we're starting to see this thing slip back once again. This crude oil market doesn't have a whole lot of upside potential in it here at the moment. If we do break higher from here, we do expect to see this thing stay range bound between about 66.5 and 62. The $62 mark, though, is going to be a good battleground here. Look for bears to continue driving here below with offers below 62. Should send this thing back down here towards $60 and get this downtrend rolling again. But in the meantime, we are still within the bounds of this range. So look for this thing to keep on chopping sideways until we can get a close down here below the bottom end of this. Big picture momentum does favor the bears from this multi-year downtrend we've been in. Not looking like there's going to be a whole lot of meaningful upside from here, but we could continue to chop in this area as this market has been pretty sticky recently. And next up, our equity indexes, seen a little bit of downside early today, but finishing on a high note. Each of our indexes rallying back here late today, and seeing a little bit of supportive action down here near these range lows on the S&P and the Nasdaq. We can see this market has just kind of been contained to about a 3% range so far this year. And as we push down here towards 6,800 today, briefly undercutting it, we did see a nice little rally back up and putting in good supportive action here over Friday session and today. Look for the bulls to try and push this market back above 69 and see this thing just continue chopping up here in this about 250, 300 point range here in the S&P. The Nasdaq is getting a little bit extended here down here near these range lows as well. Each of our mega cap names looking like they're due for a little bit of a bounce, but still a pretty ugly picture out there, and still not a time to be going all in on this market. We still have some good strength in certain sectors, specifically these industrial, material sectors, and more of these Dow sectors and names. That's going to be where the strength is. We are seeing good support at that 20-day average. Back-to-back balance days here, showing good support in this Dow index, which has been the leader over the last couple months here. Look for that support to continue to hold here in these Dow stocks. We should continue to see some choppy action and maybe a little bit of volatility. We want to make sure that the bulls can defend this last week's low here. Otherwise, things could start to get slippery for this Nasdaq. In the meantime, though, look for this choppy action to continue. Not expecting any major breaks, but just look for this sideways action to continue. There are certain areas that are still showing good strength and good spots to put your money in this market, but as far as the indexes go, it's just kind of a choppy mess at the moment. We're going to encourage everyone to just hang out and sit on the sidelines and still play a little bit defensive until we can get some better structure from those mega cap names and a little bit cleaner picture here in these indexes. So still not out of the woods. We should see a little bit of we have potential for a nice little bounce here in the short term, but over the long term we still have quite a bit of a mess to clean up here, and we need to see these charts get cleaned up before we can really commit to any major upside or power trends here in these indexes. Continue to be selective, put that money to work where the market still remains strong, and avoid some of these laggards, and protect yourself from this choppy mess that we've been dealing with over the last couple months. That's all I got for tonight. Thank you everyone for tuning in. Catch you guys tomorrow.